Well, let's get across the market open with Mark Gardner from MPC Markets. Mark, welcome to Monday. Our first full week for a while, so back on track as far as trading is concerned. What did you see on Friday, particularly out of Wall Street, that rallying continued?
Obviously, Google's reporting was very good. I think revenue was up 12%. I think their cloud services was up around 28%. So that's where we really see. I think I've said this on a number of occasions in the past few weeks, particularly while we were buying down at those lows, was just on the back of all of these company earnings that are currently going to come through, and we've got some pretty big ones this week as well. We've got Apple, Amazon, Meta, and Microsoft this week, so from Tuesday through Thursday. And look, they're going to be backward looking. So, and a couple of those companies in particular, Apple's the one we'd be mostly concerned about, but the other three really aren't going to be massively tariff affected. They're obviously to do with advertising, etc. The AI thematic's still very strong overall, so we're not particularly worried about those guys. But I think what will end up happening, and we've seen this already, is companies are going to essentially not give as strong a guidance moving forward, and they're going to be let off the hook for that. So I think we'll probably just see this continued rally for most of the week. I think, as I said, Apple probably Friday morning is going to be your risk event, because obviously they're heavily dependent on the manufacturing in China, etc. So it's that one could have some forward guidance in it that the market's not going to particularly like. And then we've obviously got US payrolls on Friday, but I don't think we're going to see the effects of the tariffs until possibly, we might have some of the Doge job cuts in these in the upcoming numbers. I don't think so though, but probably the month after, the early June payrolls numbers, where obviously you've had a couple of 100,000 people being made redundant by the job cuts there. And obviously as well, with ships being stuck in China or stuck in port at China while waiting for a tariff uncertainty, I think we're going to start to see inflation kick up as people start to do a little bit of panic buying potentially in the US, but and those tariffs obviously start to filter through. So I think probably next month, the old sell in May may actually turn out to be the right thing to be doing in the coming months.
Yeah, because a lot of speculation still obviously on tariffs where they're at. Investors seem to be fairly buoyed over the week, and we're going into the weekend, because the Trump administration says, look, we're in talks with China, but China's actually disputed that. Yeah,
I mean, there's a lot of holes in his, we knew that he was going to come out after putting his tail between his legs last week and say, we're doing deals. And there's reports that he's, in talks with 200 countries. There's only 195 recognised countries in the world. I mean, if you want to start including, some of those territories that are in dispute, we're still only at about 201. Australia's not really in talks either. So look, he's really going to beat the drum that he hasn't lost. I think his ego won't let him sort of admit defeat. But at this stage, I think China's been very quiet, and I think that's more scary than anything else. And what it's really done, as I've said, on a number of occasions over the past couple of weeks, is now other countries and other country, leaderships, they're looking elsewhere. America was always the shining light of where you wanted to export your goods to, biggest consumer market, and now they're being forced to look elsewhere. Mm. So, you've seen the likes of companies like, Treasury Wines actually come out of being dependent on one nation, and then actually being forced to improve. So there'll be some short-term pain, but I think a lot of companies will actually end up, doing deals in other countries and possibly coming out the other side better. But it's going to be a bit of a bumpy ride, certainly for the next, for the next few months, I would have thought at least.
Mark, locally, data-wise, focus this week on the CPI with the March quarter read.
Yeah, so March quarter read for CPI, again, it's backward looking. I think that'll probably buoy the market a little bit. Obviously, there's a lot of things, there's a lot of talk in the newspapers about, we're getting a May cut and all this sort of thing once the election's over. But, I still think the RBA is of the opinion that they want to see how this plays out from the global context in terms of the tariffs, because it will be short-term inflationary, and I don't know whether they're going to be necessarily committed to to that rate cut straight away. I think that noise is probably more so coming out of a Labor government that it's got 6 days till an election. So we've obviously got our election here. Canada's got an election as well this week. So not the long drawn out process of the US where we hear about these things for months and months in advance. We'll obviously have the payrolls numbers, particularly on Friday, will be, I think that'll be the big dog yet again. And any form of weakness in those numbers will probably see the market turn again.
And corporate-wise, those quarterlies continue to roll in.
Yeah, quarterlies will continue to roll in. I think Linus has had a fairly good one this morning. I haven't been completely up to date as yet, but Telig's had a bit of a knockback this morning, and the likes of AIS and the copper space and things like that. So, yeah, those quarterlies will be rolling through. Obviously, yet again, we're probably more so. The market's going to want to look forward rather than backwards, because there's obviously that uncertainty. So I'm not sure how these quarterlies are they're probably going to have lesser importance this time around, just on the basis of those of investors wanting to probably look forward, which is a little bit a touch more uncertain. But I would say those the gold miners, etc., will probably have a fairly buoyant results, as long as they don't miss. With gold prices where they are at the moment.
Well, despite gold coming off further.
Well, gold has come off further, but we were talking about it breaking 3,000 not a month ago, and it's been to 3,500. We're only pulling back from a fairly high number there at 3,500. So I think anything staying above 3,000 for any of those gold miners is really going to be a case of how much cash are they printing for moving forward. So I think at the moment it's getting pretty close. Any weakness in that gold, which produces any weakness in those gold miners, is probably going to be more of a buying opportunity rather than anything to worry about. And I think we saw a lot of speculative money come out on that first pullback from the gold highs. I think it was last Wednesday night.